Ben Bernanke, I mean, here's a guy who was given a Nobel Memorial Prize in Economic Sciences in 2022. I think he's going to be remembered centuries from now as the John Law of the 21st century. Monday, July 10th, 2023, Maneco 64, home of alternative economics and contrarian views. Today we're going to look at why central bankers got it all wrong, and especially one or two that we're going to cover. And what have they got all wrong? Well, they thought there was no consequence to their massive QE policy that they started after the financial crisis of 2008. And in my opinion, QE has been an utter failure, and we're seeing all the negative impacts from it now. And I've been warning about it for many years, and even back then, before I had my channel and I worked in the city of London. Before I start though, I'd like to thank all of you again for your interest in the channel. And if you're new to the channel and you enjoy my reports, make sure you subscribe to the channel. Make sure you hit the little notification bell. Make sure you share my videos with colleagues, friends, family, people that you think might be interested in my message. Of course, my message is, I would say, to the point and trying to be honest about things. I don't profess to have a magic solution to anything, to getting rich or to having a utopian world. It's more about common sense and the fact that there's no such thing as a free lunch. And before we look at QE and its utter failure, I'd like to give a shout out to my precious metals affiliates. And I think it's more important than ever, and this is not advice, but many of you have asked me in the past where to buy gold and silver, and today I'm going to give a shout out to ITM Trading. They provide a very good service where you can consult with them, and they will tell you the best strategy to safeguard your savings, your wealth through precious metals. So if you like to consult them, there's details below in the description of this video. So I've been reading this book here. I just started. And I'm getting along. You know, nowadays there's a lot of distractions. You on the internet, you watch videos, you look at things, you're on Twitter, and sometimes you neglect reading a book. But I'm reading this one here, The Price of Time, The Real History of Interest by Edward Chancellor, and it's a great book. Even though I haven't finished, I can tell you that it's a good one. And there's a chapter here about John Law. Some of you might not know about John Law. And John Law was a Scotsman who had to flee England because he was wanted for murder. He was in a duel in 1694, which is ironic, which is the year the Bank of England was created. And yeah, he was sentenced to hang. So he fled to France. He fled to the continent, and he ended up being advisor to the regent in 1705. I think Louis XV was only 5 years old, and France was bankrupt. And he's the guy who he was really good with maths, and he was very gregarious. He used to meet all the right people, and he convinced the French to start a central bank and print money to drive down interest rates. And he created, actually was behind the Mississippi bubble of 1720, and then everything collapsed, of course. But for some reason, he became a kind of a hero for bankers, central bankers. Of course, everything ended in disaster, and France never really recovered since that event. And 75 years later, it happened again, but they made the same mistakes, right, with the assignats in the 1790s. But this is what the author Edward Chancellor says at the end of the chapter, and I'll read it. The irrepressible law never admitted to the flaws inherent in his system. The French ambassador Count de Gergy, who visited law in Venice shortly before his death in 1729, reported that he had never seen a man more stubborn than him about his cursed system, and in such a way what is probable that from the start of its operations he really believed his projects to be infallible. Central bankers who resort to printing money, manipulating interest rates, and fueling asset price bubbles exude a similar air of infallibility. They fail to heed Quintillin's warning that it's all very well to embark on a grand monetary experiment, but there is no painless exit. And this is where we are right now, people. We are in the exit, and they're realizing that it's painful. The verdict was not out. They said, oh, we printed all the money after the '08 crisis. There's no inflation. Well, there was inflation because printing money is inflation. What they were saying is that consumer prices hadn't risen, but the funny money went into assets, financial assets, and now it's coming out of that and going into real things. What central bankers are doing now is exactly what Law recommended. Law's biographer Antoine Murphy wrote in the wake of the global financial crisis. And I think that name as well, global financial crisis, is a little bit of a misnomer, because the financial crisis was really just in the West. A lot of countries didn't get really hit by that crisis. But anyway, that's a different subject. From this perspective, it may be argued that notwithstanding the failure of the Mississippi system, Law's banking successors have been, well, there you go, Ben Bernanke, Janet Yellen, and Mario Draghi. So, yeah, it has been an utter failure, QE. And what are the consequences of it? Well, we're living it right now. The cost of living crisis, rising consumer prices, and I've spoken about Cantillon effect. I will put a video up in the card so you can understand what it is. What else are we getting now? Well, we're getting insurmountable debts, and the servicing on the debt is getting bigger and bigger because interest rates are rising. And we know that governments like the UK and the US and even the European central governments, they are up to here in debt. So, and they issue that debt at very low rates, at the rates at which central bankers were manipulating interest rates lower by doing QE. And what is QE? Well, it's quantitative easing, which means that they print money out of thin air and they buy bonds to drive down yields. So governments can keep spending, corporations can keep spending, households can keep spending as well, and keep indebting themselves through low-paying mortgages. So now it's all unraveling, and I'm afraid it's going to be quicker than the buildup of this bubble took. It's going to be like the old saying on Wall Street that you go up the escalator, a bull market or a bubble, and then you come down the elevator or the lift shaft, as the British would say, lift, not elevator. And that's what we're experiencing. And Ben Bernanke, I mean, here's a guy who was given Nobel Memorial Prize in Economic Sciences in 2022. I think he's going to be remembered centuries from now as the John Law of the 21st century. And why not all the other ones that was mentioned in the book, like Mario Draghi or Janet Yellen or even Alan Greenspan? Well, because Ben Bernanke gave me the signal back in 2002, and it was November 2002. And at the time, of course, I was working at ABN AMRO Bank. I was still in the city, and I had started buying gold that summer. And why? Well, because I wanted to diversify away from the stock market, and I'd been looking into free markets, the Austrian School of Economics. I had found out about gold, how it was important historically to the monetary system. And then he came up with this remark or speech before the National Economists Club in Washington, D.C., November 21st, 2002. Deflation, making sure it doesn't happen here. And why are central bankers so much against deflation? Well, because it defeats their purpose and it's bad for the bankers. It's good for the public, of course, because all deflation means is that prices, your currency purchases more, so that's a good thing. But in a fiat currency, Keynesian induced system, they think that they know best, that the market, we can't trust the markets, and governments and central banks have to intervene to make sure it doesn't happen. But what they've done, and what the biographer of John Law said, is basically do what John Law did, and we're paying for it. So this is the section of his speech that really caught my attention, and I'm going to read it to you. What has this got to do with monetary policy? Like gold, US dollars have value only to the extent that they are strictly limited in supply. But the US government has a technology called a printing press, or today its electronic equivalent, that allows it to produce as many US dollars as it wishes at essentially no cost. By increasing the number of US dollars in circulation, or even by credibly threatening to do so, the US government can also reduce the value of a dollar in terms of goods and services, which is equivalent to raising prices in dollars of those goods and services. We conclude, under a paper money system, a determined government can always generate higher spending and hence positive inflation. So they were telling us that they were going to create the inflation, and that they will always do so, because deflation is like kryptonite to them. So there you go, Ben Bernanke, the John Law of the 21st century, and we're paying for it now, of course. And the other thing that a lot of people didn't realize is that central banks now are deeply underwater, because their portfolio of bonds are continuing to go down in value as yields and interest rates continue to rise. And it's going to be the same thing for other institutions like pensions, fund managers, investors, and bonds are not the place to be. Just listen to my live stream from last night. I had Clive Thompson on, and he said that's the last place you want to be, because interest rates are going to have to go to insurmountable levels, or unimaginable, not insurmountable, but I mean unimaginable levels. And I've spoken about that before. So there you go. QE or money printing, to me, not surprisingly, has been an utter failure. My dad always said, money doesn't grow on trees, and there's no such thing as a free lunch. Simple concept, but hard for some Keynesians and others to understand. So let's quickly look at where the markets are this morning. It's 8:45 a.m. London time. We got spot gold is virtually unchanged, 1925. High's been 28, low's been 1919. Silver is also unchanged at 23.10. High's been 17 and the low has been just below 23. Dow futures is down 75. NASDAQ 100 futures down 62. S&P futures down 14. Sterling is down 0.25%, 128.04. The euro is down 0.1%, 109.52. Dollar's up slightly versus the yen, 142.35. Dollar's up a tenth versus the yuan, 724. To the other currencies, we got Aussie dollar down 0.2% at 66.50. We've got the dollar unchanged versus the Canadian dollar, 132.79. And the Kiwi dollar is down a third at 61.84. To the general commodities, we've got WTI crude down 1% at 73.12. Brent is down 1% as well at 77.62. Platinum is down a buck, around 912. And high-grade copper is down 0.2% at 3.76. And now to probably the most important market in this end of the everything bubble, in this unraveling of the system, the proof that QE hasn't worked. We're going to look at the bond market. So we're going to start with the gilt market, the UK government bond market. We got the 2-year yield. Yeah, that's come back down a little bit. It's still up on the day, about 9 basis points, is at 548. But more worryingly now, the longer end starting to move up, and we're going above the levels we saw last year during the trust quartang or mini budget crisis. I think there's a lot more to that crisis that started even before those two came into power. Things such as the fact that the High Court in the UK decided that the government could change the linker bonds from being linked to RPI to being linked to the CPI. That was kind of a default. And the fact that the government changed the way they calculated CPI back in May of last year, that spooked investors, in my opinion. So there's a lot more to that. But be as it may, right now, yeah, we're higher than we were last year. We're at 472 in the 10-year. It's up 6 basis points. And to the U.S. Treasury market, we got the 10-year yield above 4. And that looks set to go even higher, I would say. We're at 407. We're down up about 2 basis points. So there you go. With that, I'm going to wish you all a very good day and a very good start to the week. Take care. Bye.